Melinda, we asked this question on a day when the jobs report came in much, worse than expected. And so can you give us the sort of contours of what this looks like? A number like the average balance seems high, but in terms of whether or not these consumers can withstand it, what's the average credit score, for instance? And are many of these loans subprime or delinquent?
Well, the average credit score for new car buyers is very much prime. It's around 716. Used car buyers, it's a little lower. When you look at new cars, majority of new car buyers are very prime, and the majority of originations are very prime. But ultimately, consumers are kind of changing what they're doing a bit in response to those really high dollars. We're seeing consumers do more leasing, which has lower payments, and we're seeing consumers move more into used vehicles.
What's the headline of that? They're stretching because interest rates are low?
Well, part of it is, again, you saw that the loan amounts on new cars is over $32,000. Those payments are in the mid-500s. And ultimately, we're now having about 30% of new car sales are leasing, which, again, it's that lower payment, so certainly speaking to the affordability.
Gus,
go ahead. I'm sorry, please.
Gus, when you take a look at the numbers, though, is there any concern on your part as we see a potential downshift in the economy given the jobs report this morning? If you take a look, for instance, at 90-plus day delinquency rates in this latest quarter from the Federal Reserve Bank of New York, Q1 of 19, they're actually 4.69%, and that's the highest level since Q4 2011. Should we be worried about all of these dollars being borrowed to buy a car?
I'm not terribly concerned about it. I think that overall, if you look at consumer debt burdens, they're very low. Mortgage payments as a share of after-tax income, credit card payments. So I think consumers are doing a good job with their balance sheets. There are some vulnerabilities if there is a downturn in the economy, but I don't think auto lending is a big threat to the overall U.S. economy. Maybe a problem for auto sales if we hit a slow spot, but not a big problem for the overall economy.
Does it you sort of asked a question that was on my mind, Melissa, but does it concern you that people, Gus, are leaning toward leasing, which is often a sign that they are reaching for more car than they can really literally afford, and B, they are extending the terms of the loans out to 72 months and so forth?
I think that new cars are a better quality than they have been in past, so it may make sense to look for a bit longer loans on these. In terms of leasing, yeah, that's something to watch out for. However, I do think consumers have a little room to downshift. They have been buying more expensive models. They've been buying pickups and SUVs instead of cars. I think if the economy does get in trouble, there is the opportunity to switch to lower priced models, which could give consumers a little more breathing room going forward.
Melinda, what would be the first cracks, in your view, that you would be watching for any sort of sign that the consumer may be stretched when it comes to buying a car?
Well, I think a lot is, as what was just discussed, is if we see consumers change what they're buying. For the past couple years, that CUV and those bigger cars have been what consumers purchase. I think if we start to see some of the shifts in the lower-priced vehicles, I think those will be some of the things to watch for.
Overall, though, Gus, the headline is the consumer is still strong. I just read today, and this surprised me because interest rates are so low, and so you think, oh, consumers are really benefiting. But at least when it comes to credit card percentages, those are at record highs right now. So they're paying a lot more to service that sort of debt. When you put it all together, how does the consumer look?
I still think that consumers are in pretty good shape. If you look at consumer debt burdens overall, they're close to record lows over the past 40 years. We did see a bit slower job growth, but we're still adding 160,000 jobs per month, wage growth above 3%. So absent a more significant slowing in the economy, I think consumers will hold up through the rest of 2019.